Welcome to Daily Mortgage Rates Live with the Mortgage Calculator. We will wait just a few minutes here to get started, go live on all the different platforms. We are streaming live on YouTube, Facebook, Instagram, and LinkedIn. So give us a second just to go live on all the different platforms, and then we will get it started. Appreciate everybody tuning in. We did put the chat there up on the screen, so feel free to drop a comment there in the chat. And we will get started here in just a minute. All right, it looks like we are live on all the different platforms, so we can go ahead and get started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans, such as the loans that we're going to talk about today for a deep dive topic, which are 4-unit property loans. Now, we do this show every weekday. We go through the different live mortgage rates for different programs, and then we do a deep dive into a different topic every day. And today's topic is going to be 4-unit properties, which we do a lot of here at the Mortgage Calculator because we specialize in non-QM loans and investor loans. So our sales manager, Jose Gonzalez, with 27 years of experience, is going to do a deep dive into that topic here shortly. But before we do that, like we do every morning, Nick, let's go ahead and pull up our pricing tool and go through the rates to see what the market is looking like this morning.
All right, let me swap my screen. All right, so this is our pricing tool for our team of mortgage professionals. This is going to show us the rates today. It is June 27th, just after 11 a.m. All of the general rates and programs are live. It will show us the rate and the APR. If you'd like a full breakdown of all the fees that go into the APR, please get with one of our team members. We have over 300 loan officers licensed in 24 states for primary and second homes, and we can do our DSCR, business purpose loans, in 44 states. So for our demos today, we will set up a basic scenario, 80% loan to value, 20% down payment. We're going to set our loan amount at $400,000. Set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost. We will compare our loan types. We'll start with conforming conventional, as we do every day. Then we'll compare that to FHA, which is usually the next best option. And then we'll go into expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs. We also offer VA and USDA. VA is only for eligible veterans and active service members. If you are eligible, let us know. We'd be happy to quote it. Not everybody is. And same with USDA, that's only for eligible properties. So those are for properties in a rural area. If you do happen to be shopping in one of those areas, let us know, and we'd be happy to quote that for you. So we'll start today with conforming conventional. We will do a purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade, and for all the demos, we'll use an estimated FICO of 760 and an estimated debt-to-income ratio of 40%. So with those general settings, let's check the conventional rates this morning. And not a lot of excitement here, exactly the same as it was yesterday. So sometimes that's good. No real movement. 6.875 best option, 0.875 discount points and costs, and final APR of 7.037. So just a hair over 7% here on the APR. So that's what we'll use to compare apples to apples across the programs. So if for any reason our customer doesn't qualify for conventional conforming, usually the next option, we'll set up the same scenario, is FHA. FHA programs do allow a little more leniency on credit events as well as a higher debt to income ratio. But for this example, we'll just switch to FHA. Everything else will stay exactly the same. That way we can compare apples to apples across the programs. So let's check out the FHA options this morning. It's about the same as it was yesterday as well. Best option 6.125 rate for 0.75 discount points and costs, and a final APR of 6.709. So in this case, if our customer qualifies for both conventional and FHA, this program's actually just a touch cheaper if you compare the APR. So definitely recommend our customers that qualify for both consider FHA. Even with the upfront and yearly mortgage insurance, it's actually a hair cheaper here in this example. And for those that need to use FHA, it's definitely a benefit for them as well. But now for our last example, if our customer doesn't quite qualify for FHA or conventional, many other banks or lenders don't have other options, but that's where we love to come in and present our expanded guidelines, also known as non-QM, where we have over 5,000 programs where we can use alternative income, totally different. So we'll set this to expanded guidelines. Everything else will be the same, but we have a new option now for income verification. Now, full doc is 2 years of tax returns. That's typically what we use for conventional FHA. That's what most people are used to. So we will choose a non-QM program in order to take advantage of one of these alternative methods, such as our asset-related programs, business bank statement programs. We have our investor DSCR programs we'll talk about in a minute. Personal bank statement, 12-month. That's our most popular program by far. RSU, stated income, VOE, 1099, P&L, no income at all kinds of different options. But for our demo, we always choose the most popular, the personal bank statement 12-month option. And that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, have different write-offs and situations going on where they may not qualify or may not quite qualify for as much income as they need. So in this case, we'll make it simple for them. For income, we'll simply use their last 12 bank statements, no tax returns involved, and we'll determine a debt to income ratio, in this example of 40%, using their actual cash in the bank statement rather than their tax returns. So most self-employed borrowers qualify for double, triple, quadruple the income using this method, and therefore can qualify where they want to qualify or get that extra income they need to get that home they really want. So these non-QM programs are amazing solutions for when we have a specific need. So let's check out the options this morning. Good option here at the top, 7.25 rate. A little bit high on the discount points, but it's a little bit of a teaser there. 1.875 discount points. But you see the APR is actually the lowest option, 7.346 APR, which is just 0.3, a little over 0.3 higher than conventional. So we love when non-QM is very comparable. Definitely recommend someone that has self-employment, for example, checks out both options. Many times that little bit of extra cost is worth the flexibility here to use these non-QM programs. So a ton of different options. Please with our team. You'll notice we have dozens and dozens of different options. Some of these options here at the higher rates may allow things like bankruptcies and foreclosures and other little loopholes around the conventional program. So not only do we get to use bank statements, but we can also get around some other problems as well. That's definitely why we love the non-QM options. So now before we go to Jose's deep dive, we always want to do some live pricing for our investors out there. So for our final demos here, we'll switch it to investment properties. Whether you're a first-time investor or a seasoned investor, we have some great options. So let's set up our demo here. We will use the same 80% loan to value, 20% down payment as we had before. And we're going to go through our options here. We'll simply compare conforming conventional to our non-QM options. Remember, FHA, VA, USDA, all the government options are only eligible for primary, not investments. So we'll start with conforming conventional. Everything will stay the same as all our other demos. All we've done here is edited the occupancy to an investment property. So let's check out the pricing adjustments that the conventional programs have for investments. And as we go over every morning, unfortunately, the conventional programs have added penalties or pricing adjustments for investment properties. So the computer's unable to find an option for one discount point. The best option the computer did find, still good rates, 7.125 rate. 3.625 discount points in cost, and a final APR of 7.379. So many of our investors that still qualify for conforming conventional would like other options at higher rates. Unfortunately, there's not really any other options that the computer can find for one discount point. So our investors want other options where they can deploy, in this case, $14,500 is a lot of money that an investor can put into another investment. So usually investors don't mind going up in rate a little bit in order to reduce discount points. So unfortunately, conventional doesn't really have any higher rate, lower discount point options. That's where we love to present our non-QM options. So for the final demo today, we will set up our investment property, set it to expanded guidelines, aka non-QM. Everything else will stay the same it was before, but now we have our new options. First, income verification, and the most popular option for an investment property by far, and our most popular loan program by far, over 60% of the loans we do here are DSCR loans. That stands for debt service coverage ratio, and that's because it doesn't actually require any income or employment from our borrower. We're simply going to use the estimated rental income to determine the DSCR value. So the debt service coverage ratio, a ratio of 1.00 or higher, means that the estimated rents can cover the PITIA of the mortgage that we're proposing. It covers the monthly expenses, aka the property cash flows on a monthly basis. We also have options for a DSCR ratio under 1.00, aka the property doesn't quite cash flow on a monthly basis. So, ton of different options here. For the demo today, I'll always erase this just so we can see all the different options pop up, but we have a ton there. And the final thing is prepayment penalty. That is standard on a non-QM investment property. So we will always do 3 years for our demo. However, we do have options for zero, no prepayment. That will cost more money and limit the loan programs, so we don't do that live. And same with 5 years. That will save us some money, but not all loan programs will have 5 years. So we will choose 3 here for the demo so we can see the most popular options. So with those settings, let's check out the DSCR rates this morning. So first option that pops up, the best option, 7.875 for 0.725 discount points in costs, and a final APR, 7.932. So obviously a little bit higher rates for DSCR, no income, no employment, a lot of flexibility. And we've gone up in rate just a little bit, but we've solved our investor problem. Here, 0.725 discount points is only $2,900. So from $14,500 to $2,900, now the investor has tens of thousands of dollars to deploy elsewhere. So most investors typically, when they compare conventional to DSCR, will choose DSCR. I'd say 90% of the loans we do right now that are for investment property are going to fall under the DSCR just because of the flexibility and the ease of these programs. So a ton of different options with different DSCR ratios you'll see here. There'll be a bunch of different options with different prepayment penalty amounts that we'll see here pop up. So please get with our team. They'll find the best options for you. Some of these options at the higher rates might allow things like foreclosures, bankruptcies, might also allow things like using short-term rental income. So a bunch of different options here once we get into the DSCR. Please get with our team. We are experts on this stuff, and we can find the best programs. Now, let me switch my screen again, and we'll get into today's deep dive topic. So for today, Jose is going to discuss 4-unit properties. So very popular right now. A lot of people out there, very popular podcasts and whatnot, are promoting, rental home ownership, right? So very popular these days. Most people either want to buy a primary with extra units or want to buy a rental property with multiple units. So 4-unit properties are very common requests. There are some ins and outs of what we can do, especially conventional has a lot of rules. Non-QM throws some of those rules out. So I'm sure Jose has a couple different options here to show us, to take us through the different options, right? So that's why we love non-QM. We can get around some of the LTV limits and things like that. So very cool tricks we can do. And then, of course, we obviously still have access to FHA and conventional programs, which have some cool options for 4-unit properties as well. So, Jose, if you're ready, let's have you just talk for a minute, and then we'll bring up the live rates.
All right. Today we are doing the ultimate house hack edition of Daily Rates with the Mortgage Calculator. This is the one that definitely results in borrowers reaching out to us for quotes and end up in applications. Always happens when we throw this one out there because everybody is just dying to get that 4 unit property with minimal down payment, live in it for a year, and then move on and leave that as an investment property. And then, get whatever else they're going to get, additional properties, which later on down the road will become investment properties as well. You usually only get to do this the first time if you're doing it as the ultimate house hack, because you got to remember, um, there's no way you're going to convince any underwriter nor any mortgage loan originator for that matter that you're going to go from a single family home to a 4 unit property as a primary residence and still be in the same city, you know, that you're in. So keep that in mind. If you're relocating, that's a totally different story. So those of you looking, especially if you're first time home buyers, and especially if you're VA, keep an eye out on what we're going to show you now, because these are some amazing opportunities to become a future real estate investor. So our first option here is the VA 4 unit purchase, 4 unit property purchase at 100% LTV. There is not any loan level price adjustment for uh, financing a 4 unit property with a VA loan. So you're looking here, very good option. 7.125% is the lowest cost option. And you can buy it down all the way to 5.75%, which is a great rate, especially considering it's a 4 unit and you're at 100% LTV. And remember, VA loans, you do not pay mortgage insurance. You only pay a VA funding fee, which is waived if you have at least a 10% or greater service related disability. Let me make this a little bit bigger. Okay. So I was mentioning first time home buyer. It is possible with 5% down, and you heard me correct, only 5% down to purchase your 4 unit primary residence as a first time home buyer. Normally, the first time home buyer.
Conventional, you mean, right?
Conventional, yes,
Yes.
conventional,
First time home buyer.
home ready, and home possible, which are
Is that the AMI? They have to be AMI or just first time?
well, first they got to be first time home buyer. However, the situation with the home ready and home possible, yes, there is an income limit. It's usually 80% of the HUD median income for the area. However, if you are buying the property in a low to moderate income census tract, then that income limitation is removed, because the idea is to create economic activity in those potentially depressed areas. So that's pretty easy to check when you're looking on the geocoder, and it will tell you if it's a low to moderate income census tract, so that then you do not have to worry about the maximum income limit if you're above 80%. So here you're looking at 6.625, which is your lowest cost option, and 5.75, the lowest rate option. Keep in mind that this program does also have reduced MI. So usually it's like 10% lower, the factor. So the usual MI factor, let's say at a 97, if is 0.35, and when you go first time home buyer, this home possible, home ready, it's usually 0.25. That's 97. Not really sure what it is at the 95, but it's going to be similar savings when you're participating in this program. So this is a really good one. Most people don't realize that you can do a conventional loan 4 unit, and this would be 2 to 4 unit, but obviously we're showing the ultimate house hack here, which is the 4 unit at a 95% LTV. And then we have our FHA option here for the 4 unit, and there is not any loan level price adjustment for the FHA loan purchasing the 4 unit. So you're looking at 6.75 with a little bit of a lender credit, and 5.5% being your lowest rate option for your 4 unit purchase. Now, we have here what we call our agency fallout, which is basically a program that uses automated underwriting but is not a conventional program. Benefit of this program is that it does not charge mortgage insurance, builds it into the rate. So you're looking at 10.375 as your lowest cost option and 9% as your lowest rate option. That's 85% LTV on that one. And now we have our actual conventional loan, 4 unit purchase, primary. This is a primary purchase. Remember, we're doing the ultimate house hack here. And this one is now looking at obviously very good rates there because this is our conventional product, 7.375 as your lowest cost option and 6.5 as your lowest rate option. We got a few more options here for you today. Now we're going non-QM, so you could compare what I just showed you on the conventional loan to a non-QM loan. And again, this is a primary purchase, so 8.75% lowest cost option, 8% lowest rate option on your
And what's the
non
LTV again? Touch on
80%. Yep, this
the
is
max
80%. Yeah, this is the max for a 4 unit
non-Q.
non-QM. And now we have an investment non-QM, which is also 80%. Now
Which is
we're
higher than conventional.
Yes, absolutely. Yes. Thank you for pointing that out. We're looking at 8.49% as your lowest cost option, 7.375 as your lowest rate option. And now we have our investment bank statement 4 unit, right, at 80%. And you'll note that the rate is pretty much it's the same. And like we always like to tell the team, usually there's not I'm not going to say in every single conduit it's like this, but usually the full doc rate, the traditional quote unquote full doc rate, which would be tax returns, pay stubs, W-2, stuff like that, is going to be the same as the bank statement rate when you're looking at non-QM. And in this case, it absolutely is. So you're looking at 8.625 lowest rate option and lowest cost option, and 7.49 lowest rate option. And where would we be if I didn't show the team the DSCR, right? Save the best for last. This is obviously our debt service coverage ratio program. Rate is a little bit higher, about 0.5% higher for having the flexibility of having the income be determined by the property's rent and not by the personal income of the borrower. So you're looking at 9.125, actually has $100 lender credit, and you can buy it down all the way to 8.125. And of course, this is again DSCR, so it is investment property. So we've gone through the whole continuum here of what you can do with the 4 unit properties, if it's a primary residence or if it's an investment property, if you're going full doc, if you're going bank statement, or if you're going DSCR, which those three are the most common income categories that most people fall under.
All right. I got one question to bring up. It looks like it came in when we were doing the DSCR. How do we prove the DSCR ratio prior to closing? We simply get the estimated rent from the appraisal, right? So DSCR loan, all of the income simply comes from the appraisal report. We copy the number right off the appraisal report of the estimated rent. and that's what we use to calculate the ratio. So as long as we have the appraisal in, we'll have the exact ratio. Until we have the appraisal, we'll have an estimated ratio. So yeah, we won't know it until we get the appraisal back, but once we get the appraisal back, we'll know the exact.
Now there are some scenarios with some of the outlets that we have, some of the options that we offer, where if it's a refinance and the property is leased and the owner can provide proof of receiving the last 3 months rent at an amount higher than what the 1007 is, they will let you use that income. But that's not across the board. So you would have to read into the guidelines to see if that is acceptable with the option you are choosing.
All right. I think that's it. You can go ahead and wrap it up then, Kyle, I think.
Perfect. Absolutely. All right. Well, thank you everybody for tuning in. We do this show at 11 a.m. Eastern every single weekday where we go through the rates just like we did today. And then we do a deep dive into a different topic every day. So we have some different deep dives coming up here this week. So make sure you tune in. Thank you, Nick. Thank you, Jose, for the demonstration. And we hope to see everyone tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everybody have a great day.
Thanks, everybody.
Thank you, everybody.